If you are 62 years or older and you own a home in Delaware or Maryland, this may be one of the most important financial tools you haven't fully understood. A reverse mortgage can eliminate your monthly mortgage payment and give you access to your home equity. But it's also one of the most misunderstood loan programs out there. In this video, I'm going to break it down clearly so you can decide if it actually makes sense for your situation to get a reverse mortgage. Hello, I'm John Thomas, a certified mortgage planner with over 20 years of experience, and I specialize in helping homeowners in Delaware and Maryland make smart mortgage decisions, especially with reverse mortgages and HECM loans. There's no sales pitch here. I just want to give you clear, accurate information so you can make the right decision for you and your family. So what is a reverse mortgage? A reverse mortgage, also called a HECM or home equity conversion mortgage, is an FHA-insured loan for homeowners age 62 years and older. It allows you to convert your home equity into cash. Here's the key difference. Instead of you making monthly mortgage payments to the lender pays you. You can receive that money in three different ways: a lump sum, a monthly payment, or a line of credit. Or you can do a combination of one of those three. And you still own your home. The loan gets repaid later when you either sell the home or pass away. How a reverse mortgage works. Here's how it works in simple terms. You must live in the home as your primary residence. You are still obligated to pay your property taxes, your homeowner's insurance, any maintenance or HOA fees. Now, there is an option to include your property tax and your homeowner's insurance in the reverse mortgage like you do with a traditional mortgage, and we're going to discuss how that works in a minute. But the important thing is you're no longer required to make a monthly mortgage payment on a reverse mortgage. Instead, the loan balance grows over time as interest accrues. So essentially, you're making payments from your equity instead of your money. When the loan becomes due, your heirs have two options. They can sell the home and keep any remaining equity, or they can refinance and keep the property. Here's an important protection. Reverse mortgages are non-recourse loans. That means your family will never owe more than the home is worth. Who qualifies for a reverse mortgage? Well, to qualify for a reverse mortgage in Delaware or Maryland, you must be at least 62 years or older. The home must be your primary residence, and you need sufficient equity, typically around 50% or more, to make it work. Now, here's something important. This is not a credit score driven loan like conventional financing, but lenders do review your ability to pay your property taxes and your insurance and basic living expenses only. If needed, a life expectancy set aside called a LESA can be used to cover the costs of the homeowner's insurance and property taxes. Also, HUD counseling is required before you move forward. That's a built-in consumer protection. How much can you get with a reverse mortgage? The amount you can get actually depends on your age, your home value, interest rates. The older you are, the more you can access. For 2026, the FHA loan limit for reverse mortgage is $1,249,125. That's the maximum value to calculate your loan. Here's an example. A 17-year-old homeowner in Delaware with a $500,000 loan may be able to access somewhere around $200,000 to $300,000. But every scenario is different. That's why you need a personalized breakdown, not an online calculator. Reverse mortgage costs explained. Let's talk about the cost, because this is where most content is unclear. Upfront costs include FHA mortgage insurance premium 2%, origination fee, but it's capped at $6,000, standard closing costs, HUD counseling fee, ongoing costs include accrued interest over time, and an annual FHA mortgage insurance premium of 0.5%, possible servicing fee. Important, you're not making monthly payments, but the balance of your loan grows over time. That's why I walk every client through a future equity projection before they make a decision. Pros and cons. Let's keep this honest. Pros: no monthly mortgage payment, access to tax-free cash. You get to stay in your home, flexible payout options. Cons: loan balance does increase over time, reduces your equity for the heirs. There are some upfront costs to get in the reverse mortgage. You must maintain taxes, insurance, or a LESA. This is not a one-size-fits-all. Common myths. Let's clear up the biggest myths. The bank owns your home. That is false. You keep full ownership. The lien, it's just a lien. Myth. You can be forced out. False. As long as you meet your obligations for taxes and insurance, you cannot. Myth. Your family gets nothing. False. Any remaining equity goes to your heirs when you pass away. Most people are working with outdated information. All right, Delaware and Maryland specifics. Reverse mortgages are widely used across Delaware, such as in Wilmington, Newark, Dover. In Maryland, they're widely used. Baltimore County, Howard County, Montgomery County. Anywhere in the state of Delaware, Maryland, you can get one. Homeowners are using them to eliminate mortgage payments, increase retirement income, fund health care, or create a financial safety net. Maryland also has an additional consumer protection, including required disclosures before application. So if you're in Maryland, we'll talk about those. Types of reverse mortgages. There are a few options. The standard HECM, or HECM for purchase, or HECM to HECM refinance, a jumbo reverse mortgage for higher valued home, but that's limited by state. Most homeowners use the standard FHA-insured HECM. Step-by-step process for a reverse mortgage. Here's how the process works. You're going to have an initial consultation with a reverse mortgage loan officer. Then you have to complete HUD counseling, then do an application, appraisal, underwriting, then you go to closing. Most loans can close in 30 to 45 days at most. Now, why work with me, John Thomas, for reverse mortgage? Reverse mortgage are something you don't want to guess on. I've been helping homeowners in Delaware and Maryland for over 20 years. We don't push loans. We walk you through your options, and we'll tell you whether it makes sense or not, what your real numbers look like, and what the long-term impact is on your wealth and your heirs. So if you're considering a reverse mortgage, the next step is simple. Let's look at your situation and see if it actually makes sense. Call me directly, 302-703-0727, or visit me online, DelawareMortgageLoans.net. No pressure, just real answers. If you like the video, please subscribe,